Mozambique is set to host the Southern Africa Energy and Infrastructure Summit. That will be in the first week of May. Nigeria plans to split the country's National Petroleum Corporation into 30 different companies in a restructuring designed to help tackle corruption at the state oil company. And as the global oil giant Shell is being sued over spills in Nigeria's Niger Delta, the question is, will cash fix the problem? Good afternoon and welcome to the program. Business Incorporated, Friday, the 4th of March, I beg your pardon. Let's go on with the Southern Africa story. Africa Energy and Infrastructure Summit is scheduled to hold in Maputo, the capital of Mozambique, on the 4th through the 6th of May. The summit will celebrate regional cooperation and promote energy and infrastructure projects that require both private and public sector support. This week, Gigawatt Mozambique announced a $200 million investment into the country's power sector alongside several global stakeholders, including Standard Bank and the World Bank. The investment is expected to harness Mozambique's natural gas resources, which would further benefit many of Mozambique's neighbors in the Southern Africa region. These, along with several other projects in the SADC region, will be presented and discussed at the summit. Now let's check through the global market. Shares across Asia traded a little bit mixed but largely positive today, failing to pick up the positive lead from Wall Street. Wall Street also futures showing some rally ahead of today's non-farm payroll data. Japan's Nikkei 225 was up 0.28% or 54.62 points. The shares of commodity giant BHP Billiton rose by 1.6%, with investors enthused by a downgrade by credit ratings agency Moody's. Moody's cut its ratings of the Anglo-Australian firm to A3 from A1, citing deterioration in Billiton's earnings and cash flows as reasons. Chinese shares were hot also today, with the mainland benchmark Shanghai Composite trading positive 0.5%. Hong Kong's Hang Seng was higher 1.2% at 20,176. In South Korea, the Kospi fell slightly 0.3 to 1,950. So we have a lot on our plate as we speak. We're getting close to early morning business opening on Wall Street today. The key data is the non-farm payroll for February. It's called the jobs data. That data is being closely watched by investors, not just in the U.S., but around the world, looking at that very critical indicator as the state of the health of the world's #1 economy. Meanwhile, the Germans have their own issues to deal with in Europe. Brexit is the story. Let's bring on to have some discussion from the Frankfurt Stock Exchange, DWTV financial correspondent for Channels Television, Conrad Bosson. A good Friday to you. Let's start from your home front. The finance minister, Wolfgang Schäuble, was in London Thursday. He's weighing in on Brexit. What are Germany's concerns regarding the planned exit or the debate over whether UK remain within the EU or not?
You know, Bosun, answering this question depends very much on who you talk to. Maybe you allow me to start with the few people who are actually in favor of a Brexit, also here in Germany. Many of those people, you find them here in Frankfurt, because London is the #1 financial hub in Europe, the #1 point of innovation for the financial industry. But it's very, very likely that large international financial corporations would reduce their presence, their business, their staff in Brexit, and Frankfurt could profit from this. This city here would be ready and grateful to accommodate all these financial businesses in search of offices, staff and infrastructure. But of course, this Frankfurt point of view is a limited one, a narrow-minded and a local one. Most Germans, they are concerned about a Brexit, just like our finance minister. And this has to do with the strong and close business relation that Germany has with the UK. 100 billion of euros direct investments is what German companies have invested in the UK. That's 3 times as much than the direct investments in France. And all these businesses, these relations would be slowed down, put in jeopardy, maybe not happen at all, if the status of Britain in Europe would have to be renegotiated, and you know, the relations with Britain and the rest of Europe. That's the business point of view. And from a political point of view, of course, if one major player of the European Union leaves this union, which is a bit of a model, also a role model worldwide for how you can, you know, negotiate different interests in a multilateral and multicultural and multilingual world, then this would be a blast to this role model, and we all would get to feel it.
Very interesting. I'm sure there are days and weeks ahead to continue to chew over Brexit. But something we are launching over right now, and we'll do lunch in Central European time, we're around the same time zone, but the American friends are just waking up early morning hours on Wall Street, expectations on the non-farm payroll. So, what are expectations about this very important indicator of the state of the U.S. economy?
Well, you know, this development on the labor market in the U.S. is always important for the markets. This time, people will be focusing a bit more on the development of wages in the U.S. The way how much the wages, the money that people in the United States are getting paid for their work contributes to inflation, to overall price increases, is having an important influence on the way that the monetary policymakers in the U.S. decide and will decide on interest rates, further interest rate hikes. And we shouldn't forget the presidential race which is happening in the United States. The question whether or not the legacy of President Obama was successful, also in terms of the economy, is closely linked to the development on the labor market, to the ability of the American economy to create jobs, to the ability of the American companies to pay wages. So this question is going to become more important every month that we are getting closer to the election in the United States.
Yes, the U.S. have the elections, but let's wrap up the week, as it were, for about a minute. Conrad, shall we? Look at the stock index, the Frankfurt stock index, just over your shoulder there, heading north. It looks like this is a rally that started sometime in the week, and we're ending this week, one of the best weeks for the markets around the world since we started 2016. So what do you think some earnings been part of this week's positive numbers? Do you think this market game changer will continue into next week?
Well, a lot will depend on what's happening in Beijing at the moment, where the National People's Congress gets together and decides on the new 5-year plan for the Chinese economy. People on the financial markets hope for short-term measures decided in Beijing in order to give the Beijing and the Chinese economy a boost. Of course, if the new 5-year plan fails to impress the people on the financial markets, there's a considerable amount of possibility that we're going to see a downswing next week. Another important factor next week is Mario Draghi and his colleagues of the Governing Council of the European Central Bank coming together here in Frankfurt. And most people on the market decide that, think that Draghi and his colleagues will decide on new measures to boost lending and spending in the Eurozone. Behind that, of course, is also something negative. We've been getting reports today that growth in Italy has slowed down, so maybe the Eurozone economy needs another boost from monetary policymakers in order to, you know, not die down.
Okay, Conrad, let me throw these to you folks in Frankfurt before, so chew this over the weekend. For the first time since Nigeria's new president came into office, Muhammadu Buhari, the leaders of the two Africa's largest economies, Nigeria and South Africa, will be meeting in Abuja next week. Let's think it through over the weekend. This is the first time. Let's see what has in place for South Africa and Nigeria relations. I'd like to have your perspectives on that next week when we come back from the weekend. Do have a great weekend, Conrad, and the rest of the DWTV team. 4 channels television at the Frankfurt Stock Exchange. Okay, so Apple is seen up in arms against the FBI in the US. Now eBay, Google, Amazon, Twitter, and others are joining Apple in its court battle with the Federal Bureau of Investigation. The FBI has a court order demanding Apple to help unlock an iPhone used by the gunman behind the San Bernardino terror attack. The two groups of tech giants have now filed amicus brief, which allows parties not directly involved in a court case, but who feel they are affected by it to give their views. Apple has appealed against the court order, arguing that the company should not be forced to weaken the security of its own products. A lot more to talk about the African continent when we come back. Stick around.